Get Rich Education is brought to you by Norada Real Estate, Corporate Direct, and Mid-South Home Buyers.
Garrett Sutton here, Robert Kiyosaki's asset protection attorney and the author of Loopholes of Real Estate. As an American or foreign-based investor in U.S. real estate, you know we are a litigious society. You know that you need to protect your real estate and paper asset holdings with the right mix of LLCs and corporations. My firm, Corporate Direct, not only forms these entities, but importantly, we properly maintain them too. If you fail to follow the corporate formalities, you can lose it all in an instant. Corporate Direct is your source for LLC protection and maintenance in all 50 states. Visit corporatedirect.com or call 800-600-1760. Mention Get Rich Education for a free bonus. Switch your resident agent service to us and receive another bonus. It's all good. We look forward to assisting you at corporatedirect.com.
Welcome to Get Rich Education with Keith Weinhold, giving you information and ideas on the investment that has turned more ordinary people into millionaires and billionaires than anything else, and can provide you with more wealth and happiness than you ever thought possible. Now, here's your host, investor, entrepreneur, business owner, and educator, Keith Weinhold.
Welcome to Get Rich Education. This is episode 94. I'm your host, Keith Weinhold. You are joining me from one of 166 world nations. Thanks for being here, but as always, you're not here for me, you're here for you. There's really nothing preventing you from investing your individual retirement account into investment real estate, or a vacation home, or precious metals, or a business. Yes, that sounds exciting. But there are some limits, and we're going to discuss what you can and cannot invest your IRA into. Most people think that their retirement account, they think it has to be invested according to their company's plan, okay? And that might be true if you have a 401k or a 403b or a 457 plan, and that particular employer limits what you can invest in. And by the way, ever since the era of company pensions kind of tapered and withered away to almost nothing now, which was a defined benefit plan, well, it's largely been replaced by defined contribution plans like a 401k. And really, that's when you began hearing about a retirement crisis in the U.S. once 401ks became the plan of choice. Okay, so when the norm became 401ks invested in mutual funds, that's really the cause to the retirement crisis effect. Yet people, including smart people, they still plow funds into 401ks. And if that's not bad enough, they invest them in mutual funds, which basically yield nothing over time on an inflation-adjusted basis. That's the 401k and those type of employer-sponsored plans. But if you have an IRA, you can start a self-directed retirement account, and you might have more options to invest in those sort of less conventional assets like real estate, when you can actually get some significant yield net of inflation. And it's remarkable that more people don't know about or take advantage of self-directed IRAs and checkbook IRAs. And now maybe you're thinking, well, I don't have an IRA. Well, even if that's true, you may still want to know about investing an IRA into non-traditional assets in case you want to pool together other people's money to invest in, say, an apartment building or some other sort of property that you've identified in a deal that you help aggregate with others. Previously, those potential investors in your deal, your aggregated pooled money to buy a larger asset, maybe those investors, they didn't think they had enough money to invest. Well, with their IRA, now you might be able to show them that they do. With IRAs, the good news is that you can use them to invest in real estate. And the bad news is that there are some limitations. For one thing, you'll have a harder time taking the income property's cash flow income on a monthly basis. Okay, you can still do it, but you'll pay ordinary income tax and penalty on it if you're under 59 and a half. So though you can invest your IRA in almost anything, there are a few prohibited transactions that we'll talk about today. And it's not just the arcane stuff, it's more than just the vintage Star Wars action figures that you cannot sink your IRA funds into. There's some more serious stuff that you can't invest in. So yeah, sorry for the Obi-Wan Kenobi figure. It's going to be cash now if you want that, all right? Same goes for a Stormtrooper or Greedo. Well, you know what happens to a lot of people when they get out of high school or college, really? It's the same thing that happened to me after high school and really after college. Okay, you get a job. It takes a little while. And then once your income stabilizes, you probably contribute to your 401k. And then if you top that off, you might also contribute some of that overflow into an IRA. Yep, I used to do all that stuff myself, all right? I also used to think 15-year mortgages were smarter than 30-year mortgages too. All of those acts that one does and one thinks when they're not so financially educated, okay? Then later, if you're lucky enough to get financially educated, you learn that sound investing means buying assets that both produce monthly income now and appreciate over time, things like income property. So it's at that point that you discover, you often discover you regretted the days when you invested in an IRA. And I had that feeling too. I had my IRA invested with a big mutual fund company, so I took it all out of that mutual fund company and shut that account down. And then what I did with those funds is that I took part of it and I placed it in a self-directed IRA. And I took the other part of it and just tore it down. I paid the tax and penalty so that I could convert that other part to cash. And then I invested that cash in some turnkey real estate that created more monthly cash that I could take and consume now because I had separated that part from the IRA. Today, most people, I think they've got their IRAs with a big mutual fund company like a T. Rowe Price or a Vanguard or something, Fidelity maybe, okay? And they think that there's no alternative to that. Well, with self-directed IRAs, your self-directed IRA custodian is more neutral, okay, where they're not tied to an investment directly. Mine is with Equity Institutional, by the way. They're my self-directed IRA custodian, and that relationship has gone all right. Now, your self-directed IRA custodian, they do impose a fee on you. It usually isn't more than a couple $100 annually. Whatever. They need to make their money somewhere. Because, see, with self-directed custodians, they don't share in any profit on the investment. We're also going to discuss the rules around what you can self-direct your IRA into, and you've got to follow the rules, okay? And because rules are so important to follow, that's why I've brought on an attorney to talk about this. You can open a self-directed IRA and direct your custodian to buy real estate, but you can't take that cash flow today without tax and penalty, okay? So you can't take a present day benefit if you're pre-retirement. I guess that's one way to say it. Now, for one thing, people tend to, you kind of think about your retirement dollars differently than if you had those dollars in today's cash, okay? Those retirement account dollars, they just feel kind of more distant and hazy and gray because chances are you're probably not going to retire for a while. So therefore, it's kind of easy for you to care less about those retirement funds because sometimes it doesn't feel like real money to you. With an IRA, you might be able to tolerate more risky investments because you have more time to recover from any losses because you often don't intend to use those funds until later on in life. And people have so much equity in one of two places, either in their home or in their retirement accounts. So those two chunks, often your biggest chunks of working capital, they're both achieving little to no gain on an inflation-adjusted basis, and your returns might even be negative, all things considered. And those are the two biggest chunks of money for people, okay? Well, I wanted to bring an attorney onto the show to discuss IRAs because you do need to maintain IRS compliance for your placement of IRA dollars, and you need to know specifically what you can do and what you cannot do. You're going to meet him shortly, and he is just so cool to talk to for an attorney, okay? You just don't get a bunch of legalese, put you to sleep attorneys speak with him. Our guest is a frequent contributor at Real Estate Guys live events. They're the same events I've long attended and suggested to you. You can find out more about those events at realestateguysradio.com or getricheducation.com/events. In fact, I was last in person with today's guest and his terrific family in Miami. That's where the Real Estate Guys Investor Summit at Sea that we attended had just ended. And then we were in a Miami hotel lobby together, waiting a few minutes until our rooms were ready. Now, I do have to apologize to you. We had some audio quality difficulty in the early part of our interview, and then we get stronger. Once in a while, that's just the reality of doing this. But see, the value of the content here is so strong. And for some of you, this material could change your life. So I wanted to deliver it this week. He's coming to you from Chicago today. I'm coming to you from Anchorage, Alaska. We're going to meet him right after this. This is Get Rich Education. Cash flow real estate investors nationwide and worldwide, this is Get Rich Education's Keith Weinhold. Forbes has rated Memphis, Tennessee as the #1 cash flowing market in the world. Our good friends at Mid-South Homebuyers have been Memphis's premier turnkey real estate provider for 14 years with a stellar reputation and an A+ rating with the Better Business Bureau. Owner Terry Kerr was born and raised in Memphis. Yeah, he knows the market and has renovated and sold over 1,000 houses in the Memphis area. Find out what their many repeat buyers already know. Their houses are completely renovated, even come with a 1-year builder's warranty and a lifelong rental guarantee. They're a perfect fit for the first-time out-of-state investor or the seasoned investor diversifying their portfolio. Mid-South Homebuyers' friendly staff makes investing easy. Learn more at midsouthhomebuyers.com or give them a call at 901-217-HOME.
Are you having a hard time finding great investment properties? Unfortunately, the best deals are rarely found locally. Successful investing begins with the right properties in the right markets. Norada Real Estate provides everything you need to invest in the best deals across the U.S. Our simple, proven system will help you create real wealth and passive monthly cash flow. Get your free copy of the ultimate guide to passive real estate investing at noradarealestate.com/guide. That's NORADA realestate.com/guide.
This is our Rich Dad, Poor Dad author, Robert Kiyosaki. Listen to Get Rich Education with Keith Weinhold. And the reason I respect Keith, he's a very strong, smart, bright young man.
Today's guest is the founder and CEO of Premier Law Group. He's a nationally recognized expert in asset protection and private placements. He helps clients with capital raising needs and SEC compliance. You might already know about our guest because he's a frequent contributor at the Real Estate Guys events and he regularly travels around the U.S. as a noted speaker to business groups. He is truly one of the premier asset protection attorneys in the country today. And, he's just kind of someone that feels like a friend among us investors because, as we like to joke, he's one of the very few attorneys that actually speaks English. He keeps it simple. Welcome to Get Rich Education, Mauricio Rauld.
Thanks, Keith, for having me. Very excited to being on the show.
Yeah, it's good to have you on. So, Mauricio, first of all, what is an individual retirement account? Let's just talk about what a basic IRA is real briefly.
Yeah, so an IRA is actually an account that's set up by the Internal Revenue Service, the IRS, which allows you to place funds into an account and make investments that are actually tax deferred. So when you invest in the stock market and have a capital gains, when you withdraw the money at some point in the future, usually around 59.5, then you don't have to pay any taxes until that withdrawal happens in the future. So it's a great tax tool to defer your income from these investments.
Yeah, this is something that one often does outside of their employer-sponsored retirement plans. Oftentimes, it's in addition to that. So we have like a Roth type of IRA where the contributions are taxed up front, and then one does not pay tax again at retirement, or there's a traditional type of plan where the contributions grow tax-free, and then you're taxed at retirement. Now, I know a lot of people, Mauricio, are interested in investing their IRA funds in something other than stocks, bonds, and mutual funds because over the long term, their rates of return are low or nothing. So, for some people, they've never really heard of the concept of a self-directed IRA. Tell us about that.
Yeah, in fact, an interesting stat for you guys, there's about $7 trillion in IRA accounts, but only about 3% of those, 3% are in what's called self-directed IRAs. And real quick, I mean, in a traditional IRA, as most of you know, since that's where most people have their retirement funds, you are essentially limited to investing in stocks, bonds, mutual funds, CDs, kind of those traditional Wall Street type investments. But what most people don't realize is that limitation is not one imposed by law, it's one imposed by the brokerage or the custodians of your IRA. So there's nothing that prevents you from investing in some alternative investments with your IRA, like real estate, like precious metals, like a business. It's just that the custodians in a traditional IRA, like Fidelity and Schwab and TD Ameritrade, those guys can't make their commissions, or they can't earn a living by buying real estate. They're not real estate agents. They don't get a commission when you buy real estate. They get commissions when you buy and sell stocks and bonds. And so the limitation isn't by law. It's just simply imposed by the custodians. And so what has happened is that it is possible for you to open up what's called a self-directed IRA account, which allows you to essentially direct the custodian to put your funds into whatever investment you like. So if you're a fan of real estate like we are, then you can open up a self-directed IRA and direct your custodian to put a down payment or to purchase a piece of real estate and have the rental income from that real estate go back into your account.
Okay, so that could certainly open up a lot of options for us that yield a better investment. What all is one able or allowed to invest in per IRS rules with their IRA, and what's prohibited?
A great question. There's actually very little investments that are actually prohibited with your IRA. And this is what most people don't know about. Again, most people think you can't invest in anything other than stocks and bonds. So the only limitations are, and it's a very short list, you can't invest in life insurance companies. You cannot invest in collectibles, which is kind of a bummer for me because I'm a huge wine collector. But you couldn't invest in a wine collection or a stamp collection or even numismatic coins, which are considered collectibles. And you cannot invest in this kind of a technicality, but S corporations or in another company that is elected as an S corp, because it has to be an actual person. And you cannot, the kind of the big one is you cannot invest in anything that has a related person, meaning you can't invest in something that you personally own, that your kids own, that your parents own. Essentially, think of it as your family members. You can't invest or benefit. Your families cannot benefit from an investment. But barring that, sky's the limit, my friend. You can invest in pretty much anything you want so long as you don't invest in those prohibited transactions.
All right. So once one becomes familiar with a self-directed IRA, they learn that they can invest in, for example, a piece of turnkey real estate or mortgage notes or participate in someone else's syndication.
Yes, and syndications, as you know, that's one of the things I do, and that's a very popular way of obtaining funds. A lot of times investors are attracted to a piece of investment, real estate or otherwise, and feel like, well, I don't have the capital, I don't have 50 grand or 100 grand to invest in the deal. What they don't realize is they've got all of their IRA funds sitting there that they've kind of forgotten about because they're not thinking about touching it for another 10, 20, 30, 40 years. But that's something that they can certainly access and invest in syndications and other real estate. Again, the big limitation with, let's just take real estate, that's kind of our niche, right? The biggest limitation with real estate is that you cannot personally benefit from that investment. So you cannot rent it to yourself. You cannot, if it's a vacation home, you can't go live in it. You can't use it. You can certainly rent it out, and all of the rents simply go back into your IRA account and grows tax deferred until the time at which you decide to withdraw it.
Right. So it's just that you cannot receive any immediate benefit from using a property like a vacation type of property yourself. If you would happen to buy a vacation type of property and put that in your self-directed IRA, or if you bought an apartment building, you could not go ahead and use the monthly cash flow for lifestyle betterment.
Correct. Although a lot of people, what you can do is you can purchase what I would call a future vacation home. So, for example, I spent a lot of time in beautiful country of Belize, and a lot of people will buy raw land or will buy an investment property down there and rent it out with the idea of, hey, at some point in the future, I plan to retire down there. And at that time, when I'm ready to retire, I can then have personal use of my vacation home or build my dream home down there, because at that point, you'll be 59 and a half, you'll be withdrawing your funds anyway, and you'll be able to live there at that point.
Right. Now, I've talked here before on other shows how oftentimes that arrangement is not necessarily a good thing to do, to go ahead and buy a vacation home in a place that you hope to retire to someday because it does not produce any cash flow in the meantime. But if you purchase that within a self-directed IRA, the cash flow is not a benefit that you can take anyway. So this is potentially a smarter, or perhaps more accurately, a less bad use of your IRA funds.
Right, and especially again, most people you have their IRA funds. They don't even know where they are. Right? They know they're in the stock market somewhere, but they have no clue. What stocks, bonds, mutual funds are invested in. Here, at least you take control of your own future, and you invest it in something that you're familiar with. And again, you may have a benefit, a partial benefit from that at the time of retirement.
So, Mauricio, we've got a self-directed IRA, but one, I guess, subset of a self-directed IRA, one type, is called a checkbook IRA. Tell us about the checkbook IRA.
Yeah, so the checkbook IRA is really a neat addition or option that people have. And what that essentially is once you have a self-directed IRA account, so once you've already taken the steps to move your traditional IRA into a self-directed custodian, because we didn't talk about that too much, but the self-directed custodians are different from the traditional ones. And we're not talking Fidelity, we're not talking Schwab or TD Ameritrade anymore. We're talking about now Pensco's and Entrust and specific custodians that deal with self-directed accounts. But once you have your account in a self-directed custodian, what you can do is create an entity. We usually use an LLC, a limited liability company. We can create an entity that the IRA owns 100%. And we essentially transfer funds from your IRA account into the LLC. And once the money's in the LLC, then you have complete control as to where those investments can go. So you can then, from that LLC, now that the fund's in there, I can go buy a piece of real estate that's titled under the LLC. I can go buy precious metals. I can invest in a business. I can invest in an auction, a foreclosure, whatever it is that we want to do. We can kind of bypass the custodian and not have to ask the custodian for permission or make a request to the custodian. We simply have direct control over the LLC.
Okay, that sounds pretty exciting. What does the custodian actually do in that case with the checkbook IRA? What's their role?
So the role is the initial transfer. So think of it as that you're making an investment into a company. And it just so happens that the company is owned 100% by the IRA. So it's no different than you investing in a syndication or investing in real estate. You're essentially investing in this LLC. And so let's say you have $100,000 in your IRA account. You would therefore purchase 100% of the LLC in exchange for that $100,000. And so that's the request that you would make the custodian. You say, Mr. Custodian, I'd like you to invest $100,000 into this LLC. And that's what the custodian does. And then the custodian essentially holds in custody for your benefit the membership in that LLC. But the underlying activity is now in the LLC that you manage as the manager of the LLC and have complete control over those funds.
Okay, listeners, so I can imagine you think this is pretty exciting. Maybe you're even visualizing an open checkbook and you have just all this control over your IRA. But, I imagine there's got to be some limitations here. We're dealing with IRS rules and some certain restrictions around IRAs. Tell us a bit about that.
Yeah, so there's two important things you've got to keep in mind. The first one is you're still working within the exact same framework as you were with a self-directed or a traditional IRA. So you still have to abide by the IRS rules. You still have those prohibited transactions, right? You still can't, take personal benefit from it. You still can't use your vacation home. You still can't invest in collectibles or life insurance. So the exact same rules that applied under the self-directed approach still apply to the LLC. So that's number one. The other thing you've got to be really careful about is that the good news is you're sort of bypassing the custodian because you don't have to go back to the custodian every time you want to make an investment. You can just do it yourself. But that's also a huge negative because the custodian is essentially doing the due diligence for you and making sure they're analyzing your investment request and making sure that it complies with IRS rules. If you're doing it yourself, there's nobody looking over your shoulder. So you want to take extra care to make sure that the investment you're making within that LLC is compliant, and I would strongly urge that you consult with either a CPA or an attorney before making the transaction, because the last thing you want to have happen is for you to make an investment with your LLC, not think there's an issue with it, but it turns out there is, because the penalty for making a wrong decision is that your entire IRA account is considered distributed, and you will then get hit with penalties if you're under 59.5, and you'd obviously pay your ordinary income tax. So you just got to be careful when you're doing these structures. It's not like you could just go do whatever you want without thinking about it.
Okay, well, that could be bad. We definitely want to play by the rules. So I guess this is a question of liquidity here, Mauricio. If one has a checkbook IRA and they want to maybe pounce on an attractive deal and they need to go ahead and get that deal funded in a matter of days, but yet they need to get the custodian buy-in on knowing whether it's IRS compliant or not, how does that work? How, I guess, effectively liquid can one make the checkbook IRA?
That, in my opinion, is the main reason to have a checkbook IRA LLC. I don't think it's for everyone, right? I mean, if you're going to be investing in traditional real estate, a rental unit that you're going to purchase and close and receive income, then I don't see any benefit in creating an LLC. You can do all of that through the custodian, through your self-directed IRA. But the challenge with the custodian is it does take 2, 3, 4, sometimes 5 days for them to process your request. And so if you're doing, for example, a rehab project where you're paying contractors, or you're at an auction where you've got to make a bid on the spot, or sometimes you're investing in foreign real estate where they don't allow you to take title directly with your IRA, they require an LLC, then that's the scenarios where you set up the LLC, you've got the account, you've got the funds in a bank account that you control, you've got your checkbook or your debit card or cash or however you want to do it, and you can act quickly without having to go back to your custodian and wait 3 or 4 days for them to approve your request.
So this might not necessarily be for everyone, but it is for some people that want to go ahead and be sure that they're playing by the rules. And I know one of those rules, Mauricio, is you probably just want to plan ahead and you want to fund your LLC just one time with the most significant lump sum that you can, right?
Yeah, so that's one of the tricky parts of it, and it's kind of a gray area of the law, and I always like to kind of keep on the good side of the gray, so I usually try and not get too close to it. But yeah, the case law that established that allows us to do this really only allowed us to do it once, meaning the initial contribution to the LLC or the initial transfer is okay. But once you make that first transfer, there's an argument that now when you make a second transfer, that's a prohibited transaction because you're self-dealing with your own LLC at that point. Your IRA already owns the LLC. You're adding to it. That's a related party. That's basically self-dealing. There's some practitioners that think it's okay. There's some that don't. I think, in my opinion, the risks involved in having your entire IRA blown is probably not worth it. So my recommendation is to make one contribution to the LLC, so as much as you can. And in the future, if you need to make, if you want to make a different investment, I would suggest creating a brand new LLC and making your second contribution in a separate LLC. So you're only doing it one time, that initial contribution.
Okay, so when we think about going ahead and funding our LLC for checkbook IRA use, one of those things that we might use it for are for real estate transactions. We're real estate investors here, and, leverage is one of those great benefits with being a real estate investor. So what about the leverage portion? Say, for example, Mauricio, someone wants to buy a $100,000 turnkey property, and they want to go ahead and use $20,000 as a down payment on that. What about the $80K, the leveraged portion? When one gets a return on that, how is that treated and how is that taxed?
Great question. There's 2 things to keep in mind with that question. So let me just start from the beginning. One of the things you cannot do is personally guarantee a loan for your IRA because that's considered a self-dealing. Again, you're personally providing a service. You're personally signing on the dotted line on behalf of your LLC. So you cannot do that. If you can obtain a non-recourse loan directly by the LLC without the need for you to sign, if the LLC can sign or it's got sufficient assets that the bank will loan you funds or a private lender will loan you funds, then you can certainly use leverage, but you personally could not sign on the dotted line on behalf of your LLC. So let's go back to your example. Let's say we've figured a way to do that now, and you've purchased a $100,000 property with $20,000 down. The income that you gain from that leveraged portion is taxable. So there's something called a UBIT, an unrelated business income tax, which means any part of that income that you've acquired through that leverage is going to be taxed, which, again, isn't the end of the world. I mean, your capital appreciation continues to grow deferred until you cash out. But that income that you receive is going to be taxed, at least not the entire income. The portion that you've obtained through that leverage will be taxed under ordinary income guidelines.
Now, if that's the case, then I guess, what are some examples where you've seen someone, especially a real estate investor, use the checkbook IRA to their advantage?
Foreclosures are easy. I mean, anytime you're at auction and you're bidding against other people in real time, like I said, you just don't have time to say, okay, well, hold on a second, let me go back and call my custodian. Also, again, I've got a lot of clients who like to invest in the beautiful country of Belize. And under some countries, you just can't take title under an IRA directly. So they require you to use an LLC. In the real estate world, if you're doing a rehab project, for example, I mean, there's nothing wrong with you making an investment, rehabbing, and then selling it. Again, if you need to pay a contractor, you need to hire somebody, you don't want to be going back to your custodian every time. You want to write a check to one of your vendors in order to get that transaction approved. So in those scenarios, I think a Checkbook IRA LLC makes a ton of sense.
Well, this is a Checkbook LLC. So with the LLC, you are afforded LLC protection.
Yes, and that's another excellent benefit from the Checkbook IRA LLC. Most people don't realize that even though 401ks are pretty well protected, once you either roll that over into an IRA, you've now gone into a completely new legal world, and you don't have the same protections under an IRA that you do a 401k. And so the protections are essentially state by state. For example, where I spend a lot of time and where I'm licensed in California, only the portion of your IRA account that you reasonably need to live off is protected. The rest of it is fair game for a creditor. So having an LLC own your real estate or own your investments, and again, you can own more than one LLC, underneath that LLC, so you can segregate your exposure. But in the event that a tenant sues you, for example, you would like to have that protection of an LLC so that they cannot get to your other IRA assets that you have in your account. So it is a very powerful asset protection tool, which is, as you know, that's one of my passions, and it does provide that asset protection value that the IRA by itself doesn't necessarily provide you.
Very well explained, Mauricio. Now, when some people, they first set up their IRA, they first go ahead and fund it and make contributions to their IRA over the years, a lot of times I think they believe that they're doing the prudent thing, they're doing the smart thing, they're investing in the future. But, the realization a lot of people come to is they're investing in their future only. They really didn't realize that you can go ahead and invest for short-term, intermediate-term, and long-term benefits when you go ahead and buy something that produces cash flow. So there is an option to just go ahead, and a person can make that decision themselves to just tear down the IRA, pay the tax, pay the 10% penalty, and withdraw the IRA monies to go ahead and convert it to cash.
Oh, absolutely. I mean, we have that discussion many times. I mean, you've got to look at the pros and cons of your IRA. And if you feel you can have a much larger return in another investment vehicle outside of your IRA, then either just take the money, pay the 10% if you're under 59.5. If you're over 59.5, you don't even pay the 10% penalty and you pay ordinary income. Or you could take partial distributions, right? You could have an investment property where it's kept throwing off cash, and maybe you take a portion of that cash, that's income, for your personal use. And again, you're going to pay the penalty and you're going to pay the income tax on it. But what does Robert say at the Real Estate Guys? You don't want the tail to wag the dog, right? You don't want the tax tail to wag the dog. You want to make an independent decision as to what's best based on the information you have and what kind of returns you could obtain outside the IRA account versus having the cash free and clear.
And, another thing I think some people don't realize is that with a Roth IRA, they can withdraw their contribution portions tax-free and penalty-free now, but, they are going to pay tax and penalty if they touch the earnings that Roth IRA made.
Right. So the Roth IRA is a fascinating tool because, as you mentioned, the Roth IRA, you're making post-tax contributions. You are paying taxes on the money first, then you're contributing, but those profits grow tax-free. So you could withdraw the money. Again, you've got your penalties and it's really just your penalties. You don't have that income tax hit if you wait for that 59.5. So the Roth IRA is a powerful tool. The limitations we have on Roth, of course, is income-based, and the amount that you can contribute is a lot less than you can on a traditional IRA. If you've got significant cash in a Roth and you can invest in something that is appreciating really fast, that's a really nice vehicle. So an example that we always talk about, and actually my good friend Tom Wheelwright over at Provision, which I think you've had on the show too, he always talks about, he's not a huge fan of IRAs in general, but what he is a fan of is using the Roth IRA for scenarios like precious metals, for example. If you believe precious metals will be worth significantly more in the near future, then it makes a ton of sense to purchase them within a Roth IRA, because once that appreciation happens and you're ready to cash out, that gain is tax-free. It's not tax-deferred, it's tax-free when that money gets taken out.
Okay, so that's more on the Roth IRA. Just back to the traditional IRA, just to give a listener a picture of how this would look in their lives. If they have $100,000 in a traditional IRA and they want to go ahead and tear it down and take a withdrawal, so they will be taxed at their ordinary income tax rate, which might be, I would just say 25% for somebody, plus they're going to pay a 10% penalty on that. That's 35%. So their 100K IRA amount in a traditional plan will be taking that haircut all the way down to 65K. But, if you've got an investment that you think is going to yield significantly more, then you can catch up. It's just the decision that you have to make.
Absolutely. I mean, the best thing you can do is just make an informed decision. I'm going to do another quote of my good friend Russell Gray from the Real Estate Guys. He always says, do the math, and the math will tell you what to do.
Absolutely.
So this is a classic example. You just need to figure out both scenarios and figure out what makes the most sense.
Well, if someone wants to get a self-directed IRA or a checkbook IRA started, logistically, what's the next step for them?
There's really two steps. One is you have to transfer your account into a self-directed custodian, and I'm happy to provide some recommendations on some of those. And I think I mentioned some on the show, the Pensco's, Equity Trust. There's quite a few of them. And then once you set up that account, then my office can certainly help anyone create the LLC. The LLC is a very specialized LLC that has some very specific provisions involved. But we essentially then create the LLC so that you can then transfer the funds from your new account that you've set up with your self-directed into the LLC, and we can facilitate that here at Premier Law Group.
Okay, well, Mauricio, we covered a lot there. Is there anything else that our listeners ought to know about the self-directed IRA or the checkbook IRA that I failed to ask you?
I always like to point out just kind of the things that you want to be careful about. I think I touched on a few of them, but let me just talk about the three things you don't want to do if you have a checkbook IRA LLC. Okay, let's just make it real quick. Number one, you do not want to be paying yourself for any services you're rendering on behalf of the LLC. So you'll be the manager, but you can't pay yourself any money for performing those services because that's a self-dealing. You don't want to perform any what we call sweat equity, right? So if you've got a real estate investment and the plumbing goes down and you need to fix something, don't go fix it yourself. Go hire a plumber, go hire a contractor, because working yourself or performing services on behalf of the LLC will be considered a related transaction, a prohibited transaction. And another big one is just don't lend yourself money. Because a lot of people think loans are a good way to get around people, but you cannot lend money. If you need to bring your cash, don't take a loan from your LLC. That's going to be a disqualified event. And I think we already discussed about not signing personal guarantees. And another one, by the way, Keith, just a really quick one that people usually fall with. When you're renewing your LLC on an annual basis, which you want to make sure you're doing, make sure that you're paying that from the funds in your LLC, that you're not just using your own personal funds to renew the LLC and making sure it's maintained. So just little things like that, just making sure that you keep that separation.
Those are some great things to pay attention to. So we do have some significant benefits here that you may not have realized earlier, listeners, but there are more rules that you need to play by. Mauricio, how can our listeners find out more about you?
Easiest way is probably go to my website, which is premierlawgroup.net. I've actually gone ahead and done a little bit something special, if that's okay with you, Keith, for your listeners. But I've created a sort of a video. A lot of this, it makes a ton of more sense, especially with the entity formations when it's diagrammed and you can actually see it. So I put together a little video for them that sort of outlines and maps how this actually works from a logistical standpoint so they get a better idea.
Thank you.
And I also have, as you know, I'm an asset protection guy. So I've also got a short asset protection 101 video that I'd be happy to pass along. So I've created, if they go to premierlawgroup.net/GRE, they can just enter their information there, and I'm happy to email you those two videos. Again, premierlawgroup.net/GRE.
I really appreciate you doing that. Mauricio, Rauld, thank you so much for coming onto the show.
Thanks, Keith. Thank you for having me.
Oh, great job. Mauricio really came prepared today. Look, I really want you to do your due diligence on this one and be sure you're staying within the rules so that you don't incur an unexpected penalty. Don't risk it on not following the IRS rules. Now, a U.S. resident can invest their IRA into foreign hard investments. It is okay to do that. For example, Panama coffee farm parcels. Yes, you can do that. And quite a few people have done just that. In fact, with the Panama coffee farm parcels and IRA funds, if you've got significant IRA holdings, it really could greatly benefit you to at least look into this more and see what your options are. You should at least see what your options are. Well, is there a question that you wish I would have asked Mauricio but didn't? We really covered a lot in a short period of time there, and so with this topic, that very well might have happened. So again, you can check out his video at premierlawgroup.net/GRE. If you want to get IRA dollars working for you, I'd check that out right now while this is top of mind and tip of the tongue for you. Mauricio is not just an expert in self-directed IRAs and checkbook IRAs, he's also great for private placements. If you want to syndicate your own deal and pool and aggregate investors' money together from friends and investors, he is all that you need. Well, I'm grateful that you've chosen to spend time here this week. Until next week, check out premierlawgroup.net/GRE and don't quit your daydream.
You've been listening to Get Rich Education, telling you what the wealthy won't tell you about real estate and investing. If you enjoyed the show, please take a minute to visit iTunes and leave your comments.
Nothing on this show should be considered specific, personal, or professional advice. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Get Rich Education, LLC exclusively.
The preceding program was brought to you by your home for wealth building, GetRichEducation.com.